Our next guest says investors should expect a return to volatility in the weeks ahead. So joining us now is Allianz Chief Economic Advisor Mohamed El-Erian. Mohamed, it's great to have you back on. And let's start right there because it almost to me doesn't feel like the calm before the storm. It feels like we're in the eye of the hurricane. We've already had one round of storms here and another poised to come maybe in the next, 80, 85 days.
Yeah, first, Morgan, thanks for having me. Look, I love this calm. It's nice to have calm in the equity market, in the bond market, in the currency market. We've needed it. And let's hope it continues. But fundamentally, things have not been resolved. Fundamentally, the game of chicken between China and the US continues. And other countries are trying to figure out how to navigate this. And fundamentally, the game of chicken between the administration and the Federal Reserve continues. So welcome the calmness, but let's not get used to it because I suspect there's volatility ahead.
Let's talk a little bit more about that game of chicken between, I'll say, President Trump and Fed Chair Powell, or between the Fed and between the administration. We're going to be hearing from the Fed Chair tomorrow in the afternoon. There seems to be an expectation on the street that he's going to sort of stick to the messaging we've already been hearing from most Fed officials. When we talk about a game of chicken, what does that entail? How does that play out?
So I share the view that he will stick to his previous script. The game of chicken played out last Tuesday and last Thursday. We got close to market malfunction. It's in the Treasury market. You saw unusual correlations. You saw off-the-run Treasuries facing illiquid conditions. You saw frantic trading. And this line that divides volatility, where you can get whatever you want done at a price, and market malfunction, where you cannot get things done and you go do something else, is a very delicate line. We got close to it. Someone had to blink, either the Fed by intervening in an emergency fashion, lowering rates and talking about QE, or the administration by stepping back from the reciprocal tariffs. It is the administration that blinked, and the Fed came out of that one happy because the Fed doesn't want to cut interest rates at this point. They're still worried about inflation. So it was a good thing to have that, and this was followed on Friday by assurances from a Fed official that if we get more market malfunction risk, the Fed will intervene. So far, the Fed is in a good place because the administration blinked.
I do wonder what you make of the pretty wild moves we have seen here in the last week and a half, albeit not today, but in the bond market. Treasury Secretary Bessent played down the idea that this was foreign nations dumping holdings of U.S. Treasuries and basically said he had seen no evidence of that, instead pointing to deleveraging that's been happening in the market. Do you see it the same way? At what point would you become more concerned about the volatility there?
Yeah, someone said this morning, the Secretary of the Treasury said what the Secretary of the Treasury should say, and he said it really well. And I think that has contributed to the return of calm. The reality is, Morgan, that there are major questions about whether the U.S. remains a safe haven, whether we can continue talking about economic exceptionalism. There's a pathway to reassuring people, and that includes we continuing on deregulation, on fiscal reform, and importantly, we getting concessions from other countries. Because if we get concessions from Japan, from Korea, and negotiations are ongoing, then you will get the notion of a united front against China. If, however, we slip on domestic policy implementation, if we somehow return to the reciprocal tariffs, then this is going to be a much bumpier road. And I think United captured it really well. Like we said, it's really unusual to have two scenarios, but that's exactly what they had. Two scenarios: stable economy, recession.